Bueno, everybody, good morning. I do see that we have 23 people online. Thank you for being online, but I personally will appreciate it if next time you are in the office because classes are not the same online that when you are in person at the office. I promise you that. Regardless, I hope that the class today will be helpful. We're here to learn everything that's new about FIRPTA, which is absolutely nothing. FIRPTA is the same, but you would be surprised the amount of questions that we get every day regarding FIRPTA if you are working with foreign nationals. So just to begin, let's see this. There we go. And then will you let me know if we have questions on the chat? Dicen buenos días. Alrighty, yes. And if you do have questions, please feel free to open up. Yay! Hello. Bien, gracias. Very excited. But we have 26 people, 27 people in this class, technically, right? So that's probably the most we've had ever. So right cup half full. Alrighty, so disclaimer, always remember that we are not tax experts. We are not CPAs. We are title agents, and therefore we are not providing tax advice. You should not tell your client this is what's going to happen because Ambar said so in class. We need CPAs involved when FIRPTA is applicable because it is a CPA that will prepare the appropriate forms, not the title agent. Okay, what the title company will do is do the due diligence to determine whether or not it is applicable. And then with the CPA, the forms will be due. A lot of times you'll have the CPA tell us why FIRPTA is or is not applicable. Alrighty, so we're gonna talk about what is FIRPTA, what does the contract say about FIRPTA specifically, if there are any exceptions, what the buyer's affidavit says, what the options for the sellers are. We're going to talk a little bit about disregarded entities, and we will wrap up with final thoughts. What does FIRPTA stand for? Anybody? F is for? No one? Foreign? No? Okay. Investment in Real Property Tax Act, okay? It is una ley de comportamiento fiscal en propiedades de inmobiliarias, okay, en bienes inmobiliarios. So it is a tax act, which means it is a regulation from the federal government. So this is what the IRS says about FIRPTA. And it is always important to know what the regulation says. Mind you, this is from 1980 and it has not changed since 1980. And you can tell with the ranges, right? So when today a property is 300,000 or $1 million, maybe 40 years ago, right? It was a lot less, and you'll see that in the ranges because the ranges have not changed. But so the Property Tax Act, and this is from IRS.gov, says that this is a withholding. Okay, so it's important to understand that it is not a tax, and we will talk about that a little bit more. And I think the most important thing here is that it says that it goes to the transferee buyer, which is another misconception. Everybody gets confused that who suffers the consequences, and it is the buyer that is the withholding agent. Okay, el agente de retención, withholding agent, is the buyer. Although the funds come from the seller's proceeds, it is the seller who has to pay it, but it is the buyer who is the withholding agent. It's, for example, when you're a W-2, W-4, right? You fill out the form for the 2, it's the same thing. The taxpayer is yourself, is the employee, but it is your employer who is the withholding agent because it is through the employer that the withholding gets sent to the IRS. So that the IRS processes and returns. It's the same thing. The full withholding is going to be processed by the IRS. They will decide what the tax is, charge it, and refund you the excess. So it's the same principle, okay? So in a nutshell, we've already said that it is from 1980. Any seller that is a foreign national and disposes of U.S. real property will be subject to the act. So in 100%, if you are a foreign national, somehow this is applicable. What may happen is that there is some sort of exception that we will discuss as well. So if you're a foreign national, we have to look at FIRPTA. If you're a foreign national, we need to ask for documentation until the point where we are 100% sure that the withholding is not applicable. Why? Because the seller will sell, move away, probably go back to their country. And then who's here with the problem? The buyer. And then the buyer, obviously, if you are their agent, will say that somehow you didn't do something properly. And will, of course, say that we didn't do something properly. So we need to make sure if it applies or does not. If it is an LLC, it may still apply, okay? So we will talk about disregarded entities in a little bit. We've already mentioned that the buyer is the withholding agent. The withholding amount is calculated based on the sales price, and we will see a graphic regarding that. It's 10 or 15% of the sales price. The withholding, remember, withholding versus tax. This is the withholding, that full amount that the IRS will get from where the tax is going to be paid. And again, there are exceptions that will provoke either a reduction of the amount or that will actually even take it to zero. So it's very important to understand what the regulation says so that we know whether or not we need to withhold the funds or not. The affidavit that needs to be signed in order for the exemptions to apply, we will also look at the language and when that is an option, because it's not always an option in every single sale. And of course, always tell your clients that they need to talk to a CPA or a tax attorney when FIRPTA may apply. Do we have any questions? All right, so what does the contract say? And I've actually had people say, oh no, I've never heard of that. Then you have never read the contract. How can you have never heard of the law that exists from 1980? And it's usually the people that say, I've been in this business for 20 years, exactly, for 25 years. Well, the contract talks about FIRPTA expressly. What is it going to say? And this is an excerpt from the specific contract. So it says, seller shall inform buyer in writing if the seller is a foreign person. So the seller has an obligation, a contractual obligation to let the buyer know if they are a foreign national, okay? And then they're going to let them know because regardless, it's not an option. Oh no, I don't want it. No, if they're a foreign national, it applies and the parties must comply with FIRPTA. This is not optional because we also get that. We hear a lot of things, obviously, that's part of the business. And if they are not a foreign national, they still sign something. They sign an affidavit where they certify to the buyer and to the title company and the underwriter that they are not foreign nationals, that it does not apply, and that they understand that we are all relying on that declaration in order to move forward without the FIRPTA. Okay, so there is a declaration signed under oath. Okay, so it would be perjury to say, I am not a foreign national. Here is my social security and make up a social security number or use a social security that is not valid anymore. There are people that used to have a social security number and now it's no longer valid. That is a thing. A question that a concern or misinformation is, for example, a lot of people assume that if you have a TPS, that FIRPTA doesn't apply. But the first thing is that the T in TPS means temporary. It's not a permanent resident, right? So FIRPTA does not apply to U.S. citizens or permanent residents considered for tax purposes, right? So if you are considered a U.S. resident or citizen for tax purposes, FIRPTA does not apply. That does not mean that 100% of everybody else will pay FIRPTA. but it means that we need to look into it until we can determine that they do not. So if you do file taxes every year, or there's a test that the CPA can run to see if they are considered a foreign national or not, then maybe that would be the way. But once you tell us that once I see that your license says temporary, and you tell me that you have a work visa, that is not permanent residency. Is there a possibility that FIRPTA does not apply? There is a possibility. We just need to go through the steps until we determine that it is not applicable. And not every file is the same. So because today in Diana's file it's not applicable, it does not mean that tomorrow with Jimena's it's going to be the same thing. Every person, every client, every subject needs to be evaluated individually to determine if it applies or not, okay? And remember that again, that it is a withholding. So it's important for the client to understand that they're not paying 50% of the sales price to the IRS. We are withholding 15%, and they will eventually get some portion of it back. And we will see an example of how the withholding and the tax turn out later on. Okay, and then also in the section 18 standards, it talks about the withholding as well. Of course, the contract doesn't either say it applies or it doesn't apply. It says if it applies, this is what's going to happen, because in every file it may be different. So if the seller is a foreign national, then of course FIRPTA is going to apply. The buyer is required to withhold the 15%. Again, it can be reduced to 10%. But I think for health purposes, we should always assume it's 15 and then give the client the great news that it may be less. But the amount is 15, not 30, not more. I've heard that question a lot as well. People say, well, I've heard it's 30. Nope, that's a different type of tax. FIRPTA is 15%, and that is what we're talking about today. So yes, of course, the exemptions apply, and it does state that here. It does talk about the withholding certificate, which is one of the options the seller has as to how to manage their FIRPTA, and we will look at that as well. And it will talk about when the withholding is going to be remitted or withheld. So those are the two options. We can either keep it as your title company and wait for a determination letter, or we can send it right after the closing to the IRS, and we will talk about those two procedures in a bit. So this is the little graphic that I mentioned, and this is the summary of everything that is FIRPTA. And we use this all the time. So if you want to take a picture or have this on hand, that is fine. This is a summary of what applies, when it applies, and how much it applies, okay? So this is the way this goes. We have brackets, right? So we've already established that we're gonna pay 15% of the sales price, not the capital gain, not what they consider that they need to pay over, sales price. So if the first page of the contract says that it's $500,000, it's based on the sales price, right? And then depending on the sales price, we have brackets to determine the amounts that we're going to pay, the 10 and the 15. So we have a bracket of 300,000 or less. We have a bracket of more than 300,000, but not more than $1 million. And we have a bracket of 1 million on. If it's 1 million on, it's 15%. There is no exemption, no zeros, no reduction, no nothing. So million up, 15. Okay. However, if it's 300 to $1 million or 300 or less, there is a possibility that the amount will be reduced or even eliminated. Why? Because there is an option where if your buyer is going to reside in the property, it's going to be their primary home, then there is a possibility that you can reduce the tax. However, for that to occur, the buyer needs to sign an affidavit as well, saying, I declare that I am going to live in this property. And we'll see the affidavit in the next slide so that you see what we have there. But so it needs to be a primary home, which means that if your buyer is a corporation, is a corporation, or is a seller, is a An LLC, sometimes if it's a company, a legal entity, then they can't sign the affidavit, right? Because it's not their primary home. A company doesn't have a primary home. That is a figure that only exists for individuals. So if your buyer is a company and your seller is a foreign national, FIRPTA applies. Punto. Okay? Because they're not gonna be able to sign the affidavit. So it's going to be 15, 15, 15, no matter what. If they cannot sign the affidavit, but if the buyer will reside in the property and sign the affidavit, right? Then if it's 300 or less, FIRPTA is zero. There is no withholding. If it is 300 to 1 million, it reduces to 10% with the affidavit. And again, if it's a million and up, what happens? Nothing, 15%. Exactly, there is no reduction. So 300 or less, zero, 300 to 1 million, 10, 1 million up, always 15%. This is again, only in the case where the buyer will reside in the property, it's their primary home, and the and is very important, and they are willing to sign the affidavit. Because you can't force them to sign the affidavit, and there are people that don't want to. They feel that it's risky, that they might get in trouble. Sometimes they are not planning on residing on the property and they know that they can't certify that. They might be purchasing it as an investment property. If it's an investment property, they can't sign saying it's a primary home, or they would be committing perjury. And that happens a lot. I've had agents tell the clients, firma, doesn't matter, sign, it's okay. You should never tell your clients to commit fraud. That should never be the way that you are handling business. And I know that that is not the way that you handle yourself in estates, but you would be surprised what people do. People get creative. No, nobody's gonna know. Nobody knows. Nobody knows that you're gonna rent it. Go ahead and sign. It doesn't matter. No, you should not tell your client to commit perjury. Perjury is a felony. It's something that they can go to jail for. There's a fine for it. And if we don't withhold because they said that, and then there's a huge problem, we're gonna sue the seller because they committed fraud. And the IRS is gonna go after the seller, and everybody's gonna go after the seller. So that should never be what the listing agent is telling the seller, that it's okay, but you shouldn't tell your buyer that it's okay either, because remember, your buyer owns the property. The first thing the IRS is going to do is put a lien on the property. And so the worst consequences are going to be suffered by the buyer. The seller might not even live in the US anymore. So we can try to sue them, but if they're not here, it's going to be more difficult to actually, or maybe we get a judgment against them. But if they don't own anything here, how are we gonna get our money back? Okay, so the buyer is the one that we should all, even if you're the listing agent, should be protecting, because that is going to be the bigger issue. If FIRPTA applied and was not withheld, or if a reduced amount was held, but didn't actually apply, because again, it was reduced because of the affidavit. Alrighty? Everybody good? Okay. I'm gonna move on from this. Do we have questions on the amounts and how that works, the affidavit? Alrighty, is everybody awake on the Zoom? Maybe? All right. So this is what the affidavit says, basically. Of course, this is a template of the language, but this is the basis on which we are reducing or eliminating the actual withholding. So what does it say? It says the sales price of the above described real property. These are specific to the actual transaction, right? So in this example, we're saying it's less than 300,000. And then this is the important part. Affiant, the person that's signing, the buyer, has definite plans to reside at the above property for at least 50% of the time during affiant's first 2 years of ownership. Okay, and the question that we get a lot is, well, what happens if 1 year in they decide they win the lottery and they're gonna buy a new property? What needs to happen here is that when they are signing, that is the reality. Realities change, facts change, life changes. So if something changes further along, this was still true when it was signed. So just in case, because we get that one a lot. Another question that we get a lot regarding the changes in status is if I purchased as a foreign national, but when I'm selling as a citizen, does it apply? It's whatever is going on at the moment. So if they've already had their citizenship or their residency, then it won't apply. It's whatever is happening at the moment. At the moment, the person has the intention to live in the property for 50% of my first 2 years, which means that you can have a second home. Okay, but you have to live in the property for 50% of the time during the first 2 years. And then, of course, it reminds everybody that this affidavit is being prepared to eliminate the necessity of withholding any or all of the proceeds of the sale from the seller, and that it is being relied upon by all parties, their representatives and agents to this real estate transaction. Okay, so again, this is signed under oath. So if there are consequences when somebody signs and commits perjury. Good? Writing. Okay, so we've looked at everything, and we have determined that FIRPTA is going to apply. Then what are the options? We mentioned there are two options for the seller as to how they want to handle FIRPTA. I'm gonna go ahead and populate this completely. And then, so we can do one of two things. We can hold it in escrow, and we'll talk about what that means right now, or we can remit it to the IRS. Today, the most common one is remitting to the IRS right away, because it's taking a very long time. It used to be where when you held it, you would have it by the next 90 days, you would have the determination letter and you'd be able to get your money back. But this right now is years delayed. So we have today in Apple Tower, we have escrows from 2022 that we're still waiting for letters from the IRS to determine what to do with this money. So because it's no longer, this was of course affected by COVID. And at least as far as I know, and again, I am not a tax expert, as far as I know, that has not changed. And I am seeing more this than this, but they are still both options. What is the perk here? So when we hold it in escrow, it's because the seller submitted what we call an application for a withholding certificate. So with the withholding certificate, you are asking the IRS prior to the actual closing, to sitting and signing everything, you're asking the IRS to tell you what the tax actually is. Okay, so remember, we're withholding 15%. That's a lot more than what the tax is going to be. And we're saying, hey, IRS, I'm gonna sell my property, I'm gonna sign soon. I wanna know what the tax is now. I don't want to wait until I do my tax returns in April of next year for you to tell me and refund me then. I want it now. So this makes a lot of sense when tax season has already stopped, right? So it's April, you would have to wait till next year to do, but again, sometimes nowadays, this is gonna take longer than the year, so you might just wanna wait for the next one. You wanna talk to your CPA about that. But that is why this exists, because theoretically, the certificate should be available within 90 days of the actual, the submission. So what happens here is that the CPA, and the CPA is always going to be the one who prepares these forms, okay? Whatever forms they are, it is a CPA. If the CPA is asking me, title agents, what forms they need to sign, that CPA is not the CPA that you need for FIRPTA. Okay, and that doesn't mean that it's a bad CPA. It just means that it is a CPA that does not deal with that. It's like a doctor. The doctor, if he's a dermatologist, he can't help you with your heart problems, right? It's the same thing. If the CPA only does tax returns and is great at the tax returns, that is awesome. But he might not even know what FIRPTA is or what forms they are. And I only say that because we get calls from the CPAs asking us what form it is. That is not the CPA that we need help from. We can refer you to a CPA if you need, and I'm sure that there's referrals here from your broker and your admin team if you need one as well. So the CPA will prepare, it's called an 8288B, and that will have all the information. That is the application. So the application for the withholding certificate is submitted to the IRS prior to the closing, prior or at closing. It must be submitted before we sign the document. If we close and I didn't receive from the CPA proof that they sent it to the IRS, we are withholding and remitting. This has to be by closing. And proof means the USPS certified mail thingy that says that it was sent, because we need to be able to track it. It doesn't have to have gotten to the IRS, but it needs to be on its way. If it's on its way by closing, then we will withhold the escrow. So we keep the money, and when the IRS reviews the application, determines what the tax is, and sends us the determination letter, that is what it is called. The determination letter is going to say, hey, we received your application. We believe that from the 100,000 that you have, the tax is 50. Send me my 50 and refund the rest to whoever you need to refund it to. So with that letter, we have 20 days to send the money to the IRS, and then we refund the seller his excess withholding. Withholding certificate, understood? And then again, this nowadays is less likely. But who knows? Maybe as time goes by and the IRS gets back into its groove, it's taken a minute, but maybe it'll become more popular. Again, I think I have the oldest one that I have is from 2022, but I have several that they're just there. So those people sold their property, 3 years ago, and they're still waiting to get their tax back. I know. It's too much. It's too much. Obviously, there's cases that are more complicated than others. Sometimes the certificate has errors, and then that's a back and forth. They'll ask us for information or for the CPA. Again, that's why it's so important to have a CPA that knows about FIRPTA so that does not happen. Something that happens a lot when dealing with FIRPTA, and I'll take a minute to talk about that, is that once we've closed, a few months after, the buyer receives a letter from the IRS saying, hey, you sold this property and we didn't receive your FIRPTA. So just so you know, now you owe me $50,000 for the tax, and you owe me a penalty for not filing and a penalty for not paying on time. So because there's two penalties that they impose, and they're about 25% of whatever the amount is. So it's huge and worrisome. When a buyer gets that letter, as is natural, they freak out because there's a letter that says that they owe the IRS now $100,000, and that if they don't pay within a certain amount of time, that there will be a lien on their property. And as you all know, if you have a valid lien on the property, you can take that property away from the person, the title holder. So that is something of a lot of worry. What is my point? If that happens and you close with Apple Tower, the response to your client is, it's going to be okay. Don't worry. This happens all the time, unfortunately. I will talk to Apple Tower and get the documentation. I am sure that it is just that they didn't apply it properly. What happens with the IRS? We send them the documents, they cash the checks, and they don't apply it to the proper account. So we get those letters all the time, all the time. And what I do when that happens is I write a nice letter. Hi, beautiful people of the IRS. Dos puntos. Here is everything that you are requiring. we did send this within the 20 days. Here is the UPS or the USPS label proving that you got it on time. Here is the check that you've already cashed 6 months ago. So please be so kind as to apply it to the proper account. And usually, because I won't say it's 100% of the times, but usually that will disappear because they will see that it was paid on time, and that the letter they sent the buyer is not correct because the buyer paid it. So through us. So if that ever happens, and again, it happens more than it should because they have the money, don't help the buyer get concerned. Always assume that we did it properly. And maybe we didn't, but always assume that we did do it because we're very careful with FIRPTA and anything relating to the IRS. So just tell them, let's talk to the title company. The title company has this documents. Don't worry about it. We're gonna take care of it. And we will take care of it. We will contact the IRS and do whatever needs to happen in that particular case. Okay, but it does happen a lot. I remember a file where the letter was received like the 24th of December. And obviously that ruins the buyer's Christmas forever and ever. But it was resolved. It was the same file. It was the same situation where we did send it. We did. But by the time the holidays were over and they sent us the letter, they had already ruined their Christmas, their New Year's. And then because the realtor, oh my God, the title company. No, guys, we're very careful about these things. And remember that that is why you hire a title company. The title company is responsible to make sure that all of these things are handled properly. And if we don't, then it is our responsibility to fix it. So if you're not closing with Apple Tower, that is why you should be closing with Apple Tower, okay? So holding in escrow and sending once the determination letter comes in is one of the options. The other option is remitting. And remember here we said that this is a form called 8288B. The 8288, nothing, and /A are the forms that you sign when we're going to remit the funds right away. So in this case, instead of me withholding until I get a letter from the IRS, in this case, we close, and the regulation says that I have 20 days, the title company, has 20 days to remit the funds to the IRS. So once we close with the forms that the CPA fills out for us, we're going to go ahead and prepare the package with the check of the 100% of the withholding, and we're gonna send it to the IRS within those 20 days, also trackable, so certified mail as well. Those are the documents that I send them when they say you haven't paid. I say, hey, here you go. Here's USPS certifying that they delivered, and here is the cash check. So we send that to the IRS. They cash the check right away. Again, even if they apply it to the wrong account, but they do cash them right away. And that will, they don't send something saying we received your check, but with the buyers and the sellers having fulfilled their obligations, the obligation is obviously, it ceases, it's done, okay? So we will send, and then when the next tax season comes up, for example, if we're sending one now, what that seller will do is next year, when they're doing their taxes or their foreign nationals, they still have to do a tax return. They need to get a CPA, do a tax return. And then since IRS already has the withholding, they'll evaluate to see what the tax is. And then same thing that happens with all of us when we do our tax returns. They will take what's theirs and then refund the seller whatever excess they have. But they have to do a process with the IRS to get their money back. Okay, so they're always going to have to go to the IRS, whether they want to or not, and they will always need to submit some sort of form because they're either doing it with the withholding application or they're doing it to be able to get their money back in the next tax season. Understood? Both options? Yes? Questions? No? All righty. Anybody online? I'm gonna do my pastor in morning prayer does. Like everybody raise your hands just to see if you're awake. So I'm gonna put little hearts online to see if you're paying attention.
What happened if a person purchased a property as a foreign national,
Mhm,
but then he became a
mhm,
US president and then a US citizen?
mhm.
What happened then when they are planning to sell?
They sell as US citizen.
Okay.
Because, and actually, here's the thing. So the whole reason why FIRPTA exists is because foreign nationals don't do tax returns. And the IRS wants to make sure that they can get money from everybody, right? And this is being recorded, but the IRS won't see it. But that is the purpose. So when you purchase as a foreign national, you were a foreign national. But when you sell as a US citizen, you're doing tax returns every year. There is no way that you can do your tax returns and hide from the IRS that you sold the property, because I reported to the IRS and tell them that you sold the property. So since they're gonna get their tax anyway through your tax returns, there is no FIRPTA anymore. That's a good question. That is what we were talking about before with the affidavit. It's whatever it was at the moment. So if at the moment that you're selling, you're a US citizen, you're a US citizen. And the IRS is gonna get their money anyways. Okay, so definitely it depends on the situation. Let me see. Alrighty, there we go. So Mari me está poniendo atención. Alrighty, so again, holding in escrow, remitting to the IRS within 20 days. If we remit to the IRS on day 22, then we get that letter. We get that letter saying this was sent in late, so we received the tax, so that you're not doing the tax payment, but there will be a letter saying this was late. So there's those two penalties where you filed late and where you have to, the penalty for not paying. And then again, then we say, no, here's where you received this. And sometimes they've even cashed the check within the 20 days. And even then they say this is late. How can it be late if you cashed it within the 20 days? But it's okay. We love the IRS. So those are the options. Okay, guys? I'm gonna go ahead and move on. And we've talked a little bit about, I must have hit something here. And we've talked a little bit about it being a withholding and not a tax payment. So we have this graphic. I'm gonna go ahead and populate it as well. That kind of shows what the flow is. Remember, this is an example. So tax brackets and all those things are not set. Those depend on the person, on their situation and things like that. So when it says here that it's 10%, please don't say that I said it was 10%. It's whatever the amount is for that person. But this is how it goes. We have a lot of people that say, no, but I am selling for 500, but I should pay tax on capital gain. That's actually true. That is true. But remember, we're not paying the tax, we're withholding. So we're withholding based on the full amount of the sales price, right? So you bought it for 300, you're selling it for 500. Withholding is 15% in this particular example. So 15% is 75,000. And then we're gonna hold that until we figure out what's gonna happen. So what does the IRS do? They look at what capital gain should be. And then obviously 500 minus 300 is gonna be 200,000. For whatever reason, the CPA understood there were 50 in expenses that you're gonna reduce from the example. So, from the capital gain, so net capital gain for this example is 150. So from the net capital gain, whatever the IRS determines is your capital gain, your net capital gain, that is the amount that they're going to use to actually calculate the tax. And then that's where the brackets come in. So whatever your bracket is, which can vary, in this example, we're saying that the client is at a 10% tax bracket, but again, that is case by case. The 10% times the 150 is going to determine that it is a capital gain of 15,000. But remember, we had 75. So basically, this letter that's gonna come over, or when you're doing your tax returns, the IRS is gonna say, well, we have 75, but really, we're only due 15. So they're gonna take their 15 and they're going to refund the 60%. Or I'm going to get the determination letter saying, we've established that it's really 15, so send me my 15 and refund the 60% to the client. Okay, but for this to happen, someone needs to do the process in the IRS. Whether it is through the withholding certificate prior to closing, or whether your client is doing the tax returns the following year. And again, that's super important because people don't realize that. Because the seller says, I'm a foreign national, I don't do taxes. But if you don't do your taxes the following year, this money will always stay in the IRS. This is how you get it back through a CPA doing. So there's actually people that kind of let it go. Depending on what the amount is, or they don't want to send paperwork to the IRS for different reasons, depending on what the situation is. But you can also have people like I have a withholding from 2 years ago, that's 3,000. And that man writes every month, any word, can I have my money back? Can I get my money back? So it's all everybody's, whatever your situation is. And any money that is yours is yours. So you don't want it to be in the IRS's hands. But so again, this is how they come to whatever X is going to be times whatever your tax bracket is. And this is the best way to explain the difference between the withholding and the actual tax fee. Because again, it is not the same. I get money taken out of my paycheck every paycheck. But when I do my tax returns next year, the IRS is gonna say, from these 1,000 that I have from Ambar, her tax really is, 750, thanks IRS. So let me take my 750, but then that means I owe her the 250 difference. It's the same principle, and the IRS will always get money from us. Alrighty, so understood, tax versus withholding? As usual, I am slow on the computer. And then as we mentioned before, when there are legal entities, there are questions about whether or not FIRPTA is going to apply. If it is a corporation, the corporation pays taxes as a partnership, as a corporation. So FIRPTA does not apply. The only time when it comes into question as to whether it may apply or no is when there is an LLC. Because there is such thing as a disregarded LLC, and we're gonna talk a little bit about that. Does anybody know who that person is? This beautiful human being is called Lewis Hamilton. And Lewis Hamilton is a Formula One racer, and he is our driver, pilot, whatever they wanna call him, and he is going to be our foreigner for the day. He's a beautiful, beautiful human being that drives for Ferrari. And then Lewis, in our example, to understand the LLC disregarded entity, owns a property, right? But he owns it under his LLC called Sir Hammy, because Lewis is a Sir. Sir Hammy LLC. He is from the UK, and he is a Lord, so he is a Sir. That property is going to be whatever the property is. It's fine. When you sell the property, as we've already seen, there's going to be either capital gain or loss, because obviously not every sale is a gain. You may have a loss as well. But that gain or loss theoretically is going to the property, right? To the owner, to the title holder. The title says Sir Hammy LLC, not Hamilton. So Sir Hammy LLC is the owner. And remember that a lot of times people are looking to buy in LLCs, thinking that they're gonna avoid things. And that is a point to talk to your clients about. If a foreign national is purchasing an LLC thinking that he's going to avoid FIRPTA when he sells, it's important that he has this conversation with the CPA, because that is not true. If it is a single member LLC, he's going to pay the FIRPTA anyway. And those are conversations that he needs to know. Whenever a client says that they want to purchase in a company, in a legal entity, it is important to ask them why. to have them talk to their attorney or their CPA about what they are trying to accomplish. Because of course, there are tax benefits that they might be looking for, and that's okay, but there might be other reasons. For example, people think that if it's in an LLC, nobody knows that it's yours. That is not true. That used to be true maybe 20 years ago. But today it is no longer true. So if your client thinks that nobody's gonna ask who it belongs to and that he doesn't have to tell anybody, that is unrealistic. If that is the only reason, it might not be the best solution for them. Because then it's not in their name and they need to go through the LLC to do whatever it is. And again, FIRPTA is going to apply anyway. So it's important, not just for FIRPTA purposes, for any purposes. When somebody says, I want to purchase as a legal entity, have them talk to their attorney or sometimes CPAs prepare the legal docs for companies, but have them have that conversation of what are you looking for? What is the reason? So that however they purchase and however they take title is the way that they actually want it, but that it works for what they want. Because again, most of the time it's unrealistic. So whatever happens here when you sell the property, right? Theoretically, it affects the title holder. However, when the title holder is the LLC, and the LLC is what we call a single member LLC, and that particular person is a foreigner, then they're the ones that are going to be subject to FIRPTA. So it doesn't matter that it says Serhami LLC on the title. As the title company, we are going to ask you, who are the owners? That is part of our due diligence. And FYI, you have to tell us that the sellers have to disclose who are the owners of the property, or they can't sell. We won't move forward if you won't give us the information, where we don't have to contractually, because the seller, we already read the contract that says that the seller will disclose all the information. So they have a contractual obligation. So when I ask you, your client, Diana, your client Louis, oh my God, please let me meet him. So when your client Hamilton is selling Serhami, the house under Serhami LLC, I'm going to ask you, Diana, who are the members, not managers, the members of the company? And if what you're thinking is, the answer is, oh, they're in Sunbiz, they are not. Okay, so it's important to understand the difference between a member and a manager. Un miembro socio gerente. Those are different figures. And what you see in Sunbiz, usually, there are exceptions, but usually are the managers. The manager is the person that manages the day-to-day of the company. That maybe signs a check, that hires people, that is there every day, the manager. But the manager is not necessarily the owner. And what we need for FIRPTA is not it doesn't matter if the manager is a foreign national. Okay, what we want to know is if the owners, who are the owners, and then determine if they are foreign nationals, if there is just one. I remember a file where they changed the manager to a US citizen thinking that they were going to fix the problem. But I don't care where your manager is from. I care who your manager is because they're going to sign documents. But they are not the owners. They are not the ones with the tax responsibility. So when you tell me, no, Serhami, oh yeah, the manager is Total. Okay, well, Total Wolf is the manager, but what I'm asking you is, who is the owner? Well, the owner is Lewis Hamilton. And I'm gonna ask you, okay, what is Lewis Hamilton's social security? Is he the only one? Yes, he's the only one. What is his social security number? And then, of course, you're going to tell me, no, he doesn't have one because he is a foreign national. In that scenario, single member, foreign national, FIRPTA will apply regardless. Okay, so on that settlement statement, where we do say that the seller is Serhami, it's still gonna have a tax withholding, a FIRPTA withholding, because the person who is subject to the FIRPTA is not Serhami anymore. It is now Lewis Hamilton. Okay, this is only when it is a single member. If it is a multi-member, two or more, it does not apply. FIRPTA does not apply. It does not matter if the 2 members or 3 members, 4 members are foreign national. That does not matter. Because they have a different tax classification, they pay taxes anyway through another way. But that's beyond the point. If it is more than 1 member, it doesn't matter what their status is, it does not apply. This will only apply when it is a single member and the single member is a foreign national. Super clear? More or less? Yeah? So definitely something to look at. And also important to understand, because we get a lot of agents that get upset when we ask them for information. We are only trying to make sure that everyone is complying with the regulation so that we are all free and clear. Once we close, we don't have to worry about things that weren't done properly or getting letters from the IRS or getting fines from the IRS. Okay, so understand that regardless if your client is a company, we need corporate documents also, regardless of whether they're foreign or not. Let's say they're not. We still need their operating agreement. We still need to know who the owners are. That is just the due diligence that we are required to do by law. And you should know who your clients are anyway. So if you didn't ask for the documents because you didn't want to know, let us do it for you because we need it as well, because we need to confirm who the manager is to sign, but we also want to determine who our members are to determine if there are any other implications regarding any other regulation. When you purchase, for example, as a buyer, as a legal entity, as an LLC, and you're purchasing cash, for example, we have to report it to the government as well. And you might not even realize that. But we report cash transactions from legal entities, from LLCs to the government. It's a different regulation. But the point is that is why we're always asking for information. We're attempting to comply with all the regulation so that everybody is free and clear. Because if we don't report a transaction, we get in trouble. But your client will get in trouble as well, because it will be understood that your client didn't say it was hiding the information, they were trying to commit fraud, and a bunch of good stuff that nobody wants to be involved in with the government. So again, just understand us and, help us cooperate. Never assume that we're doubting what anybody's saying, but also understand that this is regulation, because also people say, no, but I'm telling you. I'm not suggesting that you're lying, but your word doesn't document my file. I need to have the information in the file. Like the clients that don't want to give you the social security number. No, I guarantee you that I'm a US citizen. I get that, but I need your social security. I need to report the transaction to the IRS. The only way that I can do that properly is if I tell them what the social security number of that person is. So that we get that one still once in a while, not as much as before, but people that say, I'm not gonna give you your social security, but if you don't give me your social security, we can't close. Or well, I can withhold FIRPTA and assume that you're a foreign national, but you don't want me to stay with 15% of your sales proceeds either. So eventually they come around. But all the information, we are entitled as your title company to all the information regarding the transaction, period. Your buyer is entitled to all of the information regarding the seller. That is contractual. And the seller also has obligations for the buyer that protect them as well. We are all protected by the law as long as we are all complying with the law. And if we do not, the law also has those regulations to protect us and help us enforce. So it's very, very, very important to keep those things in mind. And talking about keeping things in mind, I didn't remember that's how I put it. So just some reminders. Are we all clear on who it applies to, how the LLC entities, the disregarded entities are determined, what the 2 procedures are, what are the 2 ways that we can do FIRPTA at closing? What were the 2 forms? Or not the number of the forms, but what are the 2 ways? Hold escrow is one, we hold it in escrow. And what's the other one? You're all cheating and looking at the handout. And then remitting to the IRS. So the withholding application, the one that is prior, and the remitting once we are done. So just a few reminders, right? When dealing with foreign nationals, always make sure that they are aware that FIRPTA is a law that they have to comply with, period. It's not if you want to, it's not, oh, I thought I didn't have to do it. It doesn't matter, it applies. And if you're representing the seller, it's important that the seller understand that it is their obligation to give the information to the buyer. Oh, I had a social security once and I don't have it anymore. Let's give them that. No, that's fraud. And that happens, by the way. There are people that had a social security at some point, and for whatever reason, that social security is no longer active. I don't know if the number you're giving me is active or not. I am relying on your client's declarations that it is active. So it's important because sometimes they tell us things because they think that we're not gonna say anything. But if you know that your client is lying regarding their social, their status, or anything like that, it is important that you bring that up because you don't want to be involved in a transaction where fraud is being committed. Please save Jimena from that lawsuit and please save us from that claim. Okay, so and also when your seller is the foreign national, you need to tell them to make sure that they know that FIRPTA applies. But when your buyer is a foreign national, you also want to let them know that FIRPTA is a thing. Because then if they're gonna sell soon, it's going to apply, and then they're not gonna understand why they're leaving 15% of their funds behind. Okay, as we said, if when they sell, they've already acquired their residency or they are citizens, then FIRPTA will not apply. But that might not be the case of everybody. So always if they're foreign nationals purchasing, since you don't know when they're gonna get it, just say, hey, by the way, if when you sell, you are still a foreign national, the government will withhold 15% of it. Always have them talk to the CPA or the tax attorney. We've already seen that there's more than one way to handle it. They each have their benefits. They may have a specific benefit for that client, and the person that will determine what is best for that client is the tax expert. So make sure to do that. I've already mentioned this. Never, ever, 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 please, 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 not only regarding FIRPTA, but ever tell your client in the middle of a transaction to record a quick claim deed changing title. Never, 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 never. If you're doing it for FIRPTA, right, there's two people on the Jimena and Diana are on the title, and it turns out that Jimena is not a citizen, and then they sign a quitclaim to take Jimena out in the middle of the transaction, I know that I know that you're trying to avoid the FIRPTA, okay? Because that's so evident. You were both on the contract. Why are you all of a sudden taking her out? And we have people that have done that mid-transaction. When you alter the title in the middle of the transaction, you raise a lot of red flags. And then it gets worse because then we have to do extra to make sure that we are protected. If that happens, we're gonna charge you the FIRPTA anyway. Because your options are to show me that she paid FIRPTA when you did the transfer, or I'm gonna withhold it. So you don't avoid FIRPTA by taking a foreign national out of title right before you sell, okay? Same thing with putting it into an LLC. We get that one all the time as well, where they're gonna put it into an LLC thinking that that's going to avoid it. If we can tell that you just changed the title, and that of course, that is the purpose, then unfortunately, we're gonna charge FIRPTA anyway, so it's better not to do it. And regardless of FIRPTA, you never wanna alter title right before a transaction, because that provokes or can provoke a lot of title issues and a lot of new requirements that you might not want to bring up at the last minute. So please never do it. And if you do have a situation that may justify recording a quitclaim before closing, let's talk about it because we may have a better solution that might include the quitclaim, but maybe we do it simultaneous at closing to avoid issues, but never do it on your own. Never tell your client to record things in the middle of the transaction. Never, never. It doesn't matter if you think it's the best way, always talk to us first so that we can see how that's going to impact the transaction. Okay, don't forget to tell them and explain that it is not a tax payment. Because the client says, why are you charging me 15% tax? No, first of all, we're not charging them anything. The IRS is. but they're not charging them the 15, it's important that they understand that it is a withholding, that they will get a portion of it back if they do prepare their tax forms properly. They will get a portion of that back. I've seen both where they don't get anything back and where they get a good, I've seen it where they get it all back. But I'm not sure what the criteria of the IRS is to determine that. By the way, if it is a 1031 exchange, there is a misconception that FIRPTA does not apply. Misconception, that is not a thing. If there is a 1031, but the person is a foreign national, FIRPTA applies anyway. They still have to do the procedure. They may get it back, as I'm saying, because there's reasons why the IRS will give it all back, but you still have to do the FIRPTA process, okay? And of course, always have your closings with Apple Tower so that we can guide you and help you do all of these procedures properly and avoid any situation in the future. And that is all for me. If you have any questions, please let me know. All righty, let me see if there's anything here. I'm gonna stop sharing. And I'm gonna go ahead. Thank you for everyone that stayed online. Have a great day. Let me see what the chat's saying. Thank you, guys. Thank you all. I hope to see you next class. Thank you. See you here, not your names online. Bye.